Let's take a quick look at the markets now. A flat day on the JSE with Naspers posting a share drop following the separate listing of MultiChoice. Banks took a knock from a weaker rand. You see the old share just about flat. As far as resources shares are concerned, gold miners pushing higher despite the prospect of a damaging strike across the sector by mine worker union AMCU. But gold miners 1.1%. In the green resources, 1.3%. Some diversified miners not doing too badly. As far as the commodity prices are concerned, gold losing some steam today, more than 0.5% down, and Brent crude oil is back to its rising trend, 1.3% higher today, and that's on the back of the OPEC insisting on those supply cuts. As far as the local currency is concerned, the rand was 0.75% weaker against the US dollar, but it remains below that psychological level of 14 rand against the US dollar. 13.92 to the greenback, 15.83 to the euro, and you will need 18 rand 53 cents to get yourself a British pound. All right, Wayne McCurrie from FNB Wealth and Investments joins us now for a closer look at some of the market happenings. Wayne, thanks indeed for coming through. Let's start with MultiChoice. It looks like a good first day. Market cap 46 billion rand. Of course, we still wait for that to settle in. That, that's going to take a few months to actually get the real value of this company.
Yeah. I mean, there was massive turnover in the share today, which means there's lots of buyers and lots of sellers. And if you're an overseas investor, you bought Naspers because of its holding in Tencent. You didn't buy Naspers because of MultiChoice. So now you've got MultiChoice, you're probably a seller. So there's going to take a lot of time for the sellers to be flushed out of the system before we can see a true valuation of the share. So don't take one day's trade as being reflective of the company.
Going ahead, it's amazing. They still believe there's a future for satellite TV. I mean, certainly not in South Africa in terms of where they're looking at their growth, but north of our border into Africa. And I suppose that's where their target is.
Yes, and that's where they're losing money at the moment. So the South African market is ex-growth, quite frankly. Yeah. And it's under severe threat going forward from when data costs come down and when your network gets quicker and quicker, then all the streaming services are going to come in. Maybe the fiber optic services come in as well. They have got a few advantages. They've got sport, which a Netflix and the like don't have, and they got local content. Don't underestimate the power of local content. No American station makes African content. So they have got some advantages, but essentially, as I said, it's ex-growth. So the big growth lies north of the border, and that's where they're spending a lot of money now, and let's hope it does work out for them, because their biggest market is still South Africa.
As we get to that sort of approximate or more real market cap number in the next few months, what do you think investors would be looking at when they look at MultiChoice?
Look, you're looking at the dividend yield because it's a strong cash generator. Yep. It is, unfortunately, the opposite of a rand hedge. If the rand weakens, this share goes down because they bill in rands, but they pay for their content in dollars. So a very weak rand is actually quite negative for the business, and they have been squeezed a few times in the past. But you're going to get a high dividend yield, strong cash generation, and that's what people will be going for. So it will be almost the same as a Vodacom or an MTN type of thing. Little bit ex-growth, but strong cash flows and strong yield.
Speaking of Vodacom, I mean, I see this morning they're backtracking, initially saying that clients would be charged for this rollover, which ICASA didn't want, and now they're saying it's free. A bit of a PR disaster for them.
Yes, but we've seen this a few times now with many listed companies, and Vodacom's also been in with the please call me debacle that's been going on forever. Companies have got to be very careful how they manage the public opinion, how they manage public views, because now views can spread and negative news can spread infinitely faster than what it used to. The good news is no one remembers this next week because something else is new in the news and someone else has done something wrong and there's a social media uproar about something else. So it's very, very short-lived, but you've got to maintain your public image. And Vodacom has unfortunately slipped a little bit now. Maybe it's still relatively new for South Africans and South African companies, and they haven't quite got their head around how to manage this and how to handle it. But this is the second time a major JSE listed company has said something and then because of social media pressure, have had to back down and pull away from it. So, yeah, it's actually, it's a new force to be reckoned with in the market.
And you're quite right, because this sort of thing, I wouldn't say wouldn't happen in the US, but it's rare, just given the talking points. Someone may have said, you know, we could make a buck out of this.
Yeah. Look, I mean, you're in capitalism to make a buck.
Yeah.
I mean, that's the name of the game. You know, if there weren't profits, there'll be no business. So they're entitled to, I suppose, if you want to do it, try their luck. But then as part of the regulation, I mean, whether ICASA would have liked it, because ICASA came out and said, you're trying to circumvent us forcing you to roll over unused data by charging this fee, so then people won't roll it over because they don't want to pay the fee. So you're actually trying to circumvent our legislation. So they probably would have interfered in any case. You know, and maybe Vodacom was taking a bit of a chance here to charge a fee, because they used to make a lot of money by these things just expiring. In other words, you paid your money for your bundle, you only used half of it, the rest expires. So, but they've also cut data costs, not just Vodacom, all suppliers have cut data costs enormously, because our data costs were incredibly high. They're still high, but at least they're coming down. Look, it's a tough industry for the operators. They're under severe margin pressure, severe. They're in a saturated market in South Africa. They've tried to go overseas, and if you look at MTN, that has not been successful at all. In Nigeria, it's cost them a lot of money. So they're caught in a tough place. ICASA and the market is forcing down their top line. Voice minutes are falling every single year. You know, it doesn't matter anymore whether you're a fixed line or a mobile operator. No one's talking on the phone anymore. You've got the data costs coming down. You've got the volumes going up, but the costs coming down. Yes. So you're in actually quite a tough spot.
Yeah, you're going to see competition now. So another company that really, I mean, here you have a company that succumbed to the fall of a construction sector, so to speak, Basil Reed. They reckon they need some short-term funding just to survive. That's an interesting story, this, isn't it?
Yeah, but look at this. This is symptomatic of the whole building and construction industry. I mean, everyone in South Africa hopes and prays that we get 4% economic growth in the next 5 years. If we do, we haven't got anyone to build the buildings and the bridges and the dams and the infrastructure, because all of these building and construction companies are mere shadows, if they still exist, or mere shadows of their former selves. So there's actually could be a huge capacity issue. And all of the companies that like this, I mean, you can name them all, Avenge, Basil Reed, you know, even Wilson Bailey Homes, you thought was actually Survivor, and they are the strongest, but their last set of results wasn't that good either.
Yeah, was just
at least they've still got cash.
You look into the results and you can see that sort of thing. All right, so Brexit, I mean, we're beginning to really see the casualties of Brexit, or the uncertainty around Brexit. Either way, companies are feeling the pinch. The spotlight on Capco you wanted to mention in the United Kingdom clearly illustrates this.
Now, Capco's got two businesses. One is very successful, that's Covent Garden. That seems immune to Brexit recessions. It is truly a world-class asset. But the other asset they own is the old Earl's Court Exhibition Centre, which they've bought the land, they've knocked down the exhibition centre, and they're trying to build residential units and sell it, and no one's buying. So the property market, the residential property market in the UK is under severe pressure. And so they had to write down the capital value of that investment by 15-odd%. Luckily enough, Covent Gardens, they wrote up a little bit. But overall, I mean, it was actually quite a poor result, and this is directly related to Brexit. Now, look, hopefully by the end of March, we know what Brexit's going to do. I doubt very much if it's going to be the so-called hard Brexit, where you leave without a deal, because no one wants that.
A deal's got to come through.
A deal's got to come through, or it's got to be postponed, or it's got to be cancelled. So those are your alternatives. In other words, this is more than likely, and maybe we're seeing it in the pound, we've probably gone past the worst news on Brexit, because whatever happens going forward now will actually be less uncertain than right now where we sit with Brexit, because either they'll strike a deal, which is unlikely, they'll postpone it by 2 months or a year or 2 years, you don't know how long. That seems the most likely, but there's still a fairly big outside chance that they just go to a referendum or just cancel it. So in other words, all the scenarios from this point onwards is actually better. And as I said, maybe we're seeing that in the pound already.
Yeah, well, that's interesting. From FNB, Wayne McCurrie, thanks very much.